Well, it's not looking good for the stock market. Today alone, the S&P 500 has sold off about 2.5%, which might not seem like much, but that is a massive move for a index like the S&P. That is billions of dollars wiped in market cap. So in today's video, we are going to be talking about what's going on and answering that main question of, is this thing going to continue to sell off, and are we entering a global recession? So I hope you guys all enjoy it. If you guys have any questions, feel free to ask it down below. And if you guys want to learn more about how to navigate the markets and trading and swing trading and all of that good stuff, I highly recommend checking out the Swing Trading Masterclass. It's our school. I'll put it down below. You guys can use code money 50% off, and I'll see you guys in there. But guys, I'm super excited to make this video. We got private live streams, we got quizzes, we got lectures all in that school. But guys, I'm so excited. Can't even function. So let's jump into this here. So when it comes to looking at the S&P, look at this. Red all around, with the occasional 1% gain, with the occasional 14% gain on good earnings, and a couple of other, very sporadic different types of stocks that are up. But in general, looking at this, you guys can see just the massive amount of sell-off. Microsoft 4%, Nvidia about 10%, Apple 5%, Google 3%, Meta 4%, Amazon 5%. So why are we getting so much sell-off here? So one of the reasons why we're getting so much sell-off in general is right now the U.S. American recession fears spark a huge Japan sell-off, point to lower U.S. Open. So as of right now, what we're kind of seeing is a couple of things. We're seeing a lot of conflict right now overseas, especially in Japan with their markets. And overall, too, we've seen a little bit of a higher unemployment rate than was expected. So right here, Friday's job report, which showed the U.S. unemployment rate unexpectedly climbing to 4.3%, caught Wall Street off guard. It also reacted to a weaker outlook for Amazon, as well as growing belief that much of the recent run-up in tech stocks, which pushed the NASDAQ to record highs just months ago, has been overdone. So we're seeing pretty much just the general S&P 500, so the top 500 companies, at all-time highs recently. Recently we've seen everybody investing into tech. We've seen companies like Nvidia being up to 200%, 150%. So it's very common. It's very common that right now everybody is investing into AI technology and all that stuff. All that stuff, there's no such thing as a stock that only goes up. So given that the S&P and the NASDAQ is definitely heavily influenced by technology, we're seeing all those stocks that were, in my opinion, probably a little overvalued finally start getting some sell-off, which is healthy. We want a stock in the stock market to go up and down. Going down, having a little cool down represents a healthy economy that we kind of have things in check. I understand that it may look a little scary and daunting just because from the highs of the S&P 500, we've sold off about 8%. So right now, we're technically not in a crash or a recession. We still got another 12% to go. But given that we're getting sell-off, what should you do? That is everybody's main question. So for me and my strategy and my approach when it comes with investing, I definitely think there's two approaches. The first approach is going to be just continue to invest. Don't do anything. Maybe add more to your position and just start that process of dollar cost averaging. And if you haven't started investing, now's the best time. If you missed out on all of the gains this year, right now it's like investing all the way back in early 2024. So it pretty much wiped almost 1 year of profit from the S&P. As we continue to get more sell-off, if we can get down to like the 4,440 range, this is like investing all the way back in mid 2023 and even mid 2022. So the lower we go, the better opportunities we have for future growth. I also believe that looking back throughout history over the past 90 years, through all the ups, through all the downs, if you have a long-term outlook on your investments, Crashes and sell-off represents a massive for sale sign to buy stocks at a cheaper price. And historically, there has always been sectors during crashes that perform better than others. Historically, dividend stocks. People are less likely to sell dividend stocks because they are paying them cash flow, which causes them not to sell off as much compared to the general market. So have some of those, as well as be diversified. Hold some money in bonds, hold some money in cash. Use sell off. Don't be fearful. Use sell off as an opportunity to invest into stocks at a cheaper price. And if you understand that, you'll be definitely suited for massive success. And if you have any questions, feel free to ask down below. Check out our school. And guys, this is what's going on. We'll keep you guys updated. So like, subscribe, and we'll see you guys in the next one. Take care.